The F.A.A.N.G.s get their bite back. Volatility hits an all-time low as markets stretch to more all-time highs. Stay tuned, we'll talk about this and much more. Hello, this is Michael Loftus with Wealth and Wisdom TV for our weekly update ending 10 to 6 and green across the board. No surprise, we've been talking about this with all of our indicators being bullish at this point. First up, question from one of our viewers. How do earnings look and can the market support the projected earnings? Well, yes and no. I think that this quarter, the numbers are a meager 3.8% rise, which is less than the last two quarters. Here's a chart I've shown in the past that shows the S&P, of course, going up, and I've got GAAP earnings, generally accepted accounting principles. So the one thing I do like here is that earnings are finally going up with the markets, but we're still a little bit stretched, no doubt about it. But this week will tell us because we start earnings seasons. So let's get to the big charts. First up, S&P, as we talked about, looks great. Breakout continues to go up. The only thing I see here is we are definitely in some overbought conditions, as you see that on the bottom with relative strength. You know, MACD still pointing up, but I would anticipate a pause this week. We've had a long run here, so let's see what happens now. Going forward, I think when you look at the trend line, this is going back 2 years from our first meaningful correction, and we still have a little bit of ways to go. I'll have Michelle focus in on that trend line. Next is the weekly view. What I like here is we actually had a positive crossover on momentum down the bottom. So that's setting up nicely as I think we consolidate here. Obviously, we've gone a while. You can see the trend lines. We got a little bit of a breakout up top there. So again, on the weekly chart, looks good. Got a ways to go. NASDAQ 100, really looking good here. We've talked about this. This was really, took a little bit of a pause, as I mentioned about the F.A.A.N.G.s. They have not done much in the last month. And we're seeing it here in the NASDAQ 100. So we had that bullish flag there. We've had our push up. The good thing is momentum's still pointing up, and RSI at the top, we still have some room to go. So still like NASDAQ 100 as we go forward. Next one, 200-day moving average. We've been talking about this. Above 60% is bullish, and boy, is it all bullish. When you look here a couple weeks ago, and I have them highlighted in red, smalls and mids were still lagging, and big time moves right there. So you've got the small mid NASDAQ 100 and the S&P, all above 70%, very bullish. Chart I haven't shown in a few weeks. This is our number of new highs minus new lows, divided by total issues. We got the S&P 1500 on top, S&P, NASDAQ, small mid. So when we look here, okay, what do we see? Bullish. Above 10 is bullish. And I've added a green line. Michelle will focus that. That's when we made our short-term call to go all in. So you see at this point, it was a nice call. It's working out so far. And we're going to continue to watch this, but definitely a good look. Next up, sector focus. So on our sector focus, I'm going to talk about just a couple items today. Healthcare, we mentioned we added that into this quarter. Why? You kind of see the pullback, right? A little bit of a bullish wedge. Starting our way up. I like the way it looks. More importantly, at the bottom, momentum, MACD, we're seeing a positive crossover there. And also at the top, RSI relative strength, we have a way to go. So healthcare is setting up nicely. We like that as we head into the quarter. Next one is utilities. Talked about that a few weeks ago. Has taken a pretty good hit because of interest rates, but they've done pretty well for a risk-off asset this year. At the bottom, I'll have Michelle focus on that. And what we see is performance up over 9%, which is strong for a sector that, again, is risk off. So we looked there. I also added in a pullback and it shows almost 5% we've pulled back. So if you're looking for opportunity, you're looking for pullbacks. Now here on the chart, we see a wedge straight down, and then we went up. Most importantly, we broke out of that wedge. Momentum looks good, pointing up, and a long way to go for relative strength. So I really like this setup here. Might add this week to a few accounts, but definitely see where this might be an opportunity as we head into the quarter. Now, before we get too excited, let's bring it back a little bit to some realism. And let's take a look at this chart. Here's our S&P, and then behind it, I have overlaid the CAPE, cyclically adjusted price earnings. Now, we're above 25 right now, way stretched, okay? Now, if we were at 20, we'd be at 2080. If we were at 15, which is the long-term average, 1560 on the S&P. 10 would be 1040, that obviously would be oversold. So, you know, obviously we're overstretched. I'm not saying the market's correcting right now, but when you look at this, overstretched and future returns generally will be slower than normal. Then we look at our pullbacks. Well, here I've added in 5% pullbacks. We have not had a meaningful pullback since 2015, and that is normal. Absolutely normal course of the markets. And then you look at the 10%, same thing. We had one in 15, 16, and all the way back to 2012. So again, this is just normal parts of the market that we're not seeing, and I believe we are way overdue for it. Volatility, talked about it in our intro today, so I went back to the original read in 1990, and you look here, right, 1990s tech bubble, right? Right before the tech bubble, okay, we saw volatility really go lower, and then of course the market corrected. And then we have our 2008 housing bubble, okay? And then today, we're gonna call it the 2010 central bank everything bubble. We hit an all-time low this week at 9.18. I mean, it's ridiculous how little volatility it is in the market right now. And here's a front page from The Economist this weekend, and they agree. The bull market in everything. So yes, this concerns me. You look at each of those trends correlated to the S&P at the bottom. The markets are cyclical. Let's see what happens. Next up, the data. Bunch of little points here. The most important one from last week, ISM and non-ISM, our best read since 2005. Here's a chart here on ISM. Again, looks great. Let's wait and see though, because I have a chart here from after Katrina. A lot of this could be from the hurricanes, manufacturing kicking up. Let's see if we can sustain those great numbers. Wrapping things up here, the consumer, the individual investor, A.A.I.I., bullish, 35%, neutral, 31%, added a couple bears at 32.8, but neutral it seems, but our fear and greed soars to 92. I don't remember a number like that since I've been tracking this. We're 85 last week, 92 this week, and that explains why our three indicators are positive: short-term, mid-term, and long-term. And I'm gonna bring it back. I know some people hate it, but it's time to stay nimble again. When you're up this high, this stretch, some of the things we talk about, you gotta be open and ready for some moves. So as always, we appreciate you watching. This is Michael Loftus for Wealth and Wisdom TV. Thank you so much and make it a great week.